Job openings in the U.S. hit the lowest level since March 2021, with the labor market softening. Is this a sign that it's time for the Fed to cut its key interest rate? For more, we're joined by Professor Shin Se-don this morning. Welcome. Good morning.
Good morning.
Professor Shin, job openings in the U.S. hitting the lowest level in over 2 years. Now, how is this an indication that consumer prices are being tamed?
Well, job openings were 8.7 million, and that is traditionally it has been 7 million before pandemic. So if you compare to the pandemic period, still it's a little high, 1.7 million high. So that tells you that labor market is still pretty hot, and so for the people in the Fed, they could not be satisfied that the labor market has been pretty much cooled. So to me, 8.7 million job opening, and also job opening ratio pretty above point, I think 7. Still, labor market is pretty hot, and that tells you that it's going to take some time for the people in the Fed would lower the rate.
I see. Then you wouldn't say the cooling demand across the U.S. labor means a rate cut soon. What do you think? It's definitely being welcomed by the Fed, though, right?
Oh yeah, I mean, if you compare it to previous month, when the job openings were about over 10 million, now it is about 8.7 million. So compared to the previous month, the job openings has been cooling pretty much. That is a good sign for inflation in the labor market. But when you compare to the pandemic level, as I said, it has been about 7 million. So still, 8.7 million job openings is pretty hot. And that tells you that the wage growth has been growing at a steady above 4%. So it is too premature for the people in the Fed to, to think about the lowering rate. So I think we have to wait at least 6 months, to consider a further rate cut.
I see. Well, there were some mixed reactions from market watchers on the latest data released on a couple of days ago. Now, some analysts expect a rate cut as early as the first quarter of next year, but you just said at least 6 months, right? So you were not definitely on the same page, right?
Oh, yeah. I mean, the people in the Fed has been saying that their target is to keep the inflation below 2%. Now, at the moment, the inflation is above 3%. And the indicator that the people in the Fed are looking at is PCE, and PCE is about 3.5%. So it's almost, a 75% higher than target. So for the people in the Fed, it is premature for them to think about the rate hike. That's why, the Jerome Powell has been saying to the people that we're not ready to, rate cut, and the market has been going too far and too fast.
Definitely. So according to you, no rate cut until maybe Q2 or Q3. Then how many rate cuts do you think there will be actually in next year? I mean, some watchers are saying at least 2 and even up to 5.
Well, you have to, the fundamental decision has been made upon how the inflation has been coming down. As I said, inflation is still over 3%, no matter whether you look at it, CPI or PCE. So it's a long way for the people in the Fed to rate cut. So I believe if the Fed cut the rate, that will be the bottom half of 2024, and the number of rate cut. I think, assuming that they rate cut by quarter percentage point, about twice in the latter part of 2024. That, I think, depends upon whether the inflation rate goes down below 3%.
I see. The U.S. monthly job report is also due out this Friday. That will probably give us a bigger and clearer picture of what direction the Fed will take in the new year, right?
Yeah, many expect that job openings will be about 150,000 or below that. And that has been usually over 200,000 in the previous month of 2023. So if the job openings comes down to, let's say, 100,000, that's a significant, implication that the rate cut will come a little faster. But as long as it is bigger than 100,000, which will be coming on Friday, still, the people in the Fed are hesitating to, cut rate in the first half of 2024. So my point is, we have to wait first how the inflation goes down below 3%, and second, how the job openings will come down below 100,000. That, I think, two measures are critical to understand when and how much the Fed will rate cut.
Right. It is widely believed that the Fed will end the year with another rate freeze next week. Thank you so much, Professor Shin, for your insight. As always, you have a lovely day.
My pleasure.